It's Sunday, the 30th of June 2019. Given the performance of the gold price and some of the gold stocks in the last couple of weeks, I thought it would be a good opportunity to do a bit of a rundown. Some of the stocks I've been following and are interested in. Particularly, what I wanted to talk about was the exposure to US dollar gold. I think is something I've often spoken about the Australian dollar gold price in these videos, but I think we're now moving into an environment where US dollar gold exposure will outperform in the stocks, and that's a different set of stocks than, all these companies are obviously Australian listed, but those who sell gold in US dollars and have their costs in US dollars will probably outperform. And that's what happened in 2016 at a similar type. The Australian dollar gold stocks has had a good run, and the US dollar gold producers kind of had lagged, and then it switched around, and there was a massive outperformance. I'll talk about one of those in a second, but the main stock that I've sort of focused on and have bought recently is Medusa Mining. Been following this for years. It's been a dog. It's, obviously long-term chart down from almost $9 there. It's been bottoming out here for 5 years. They've just finished building their another shaft at their mine in the Philippines, gradually improving production profile. And probably, I think they're likely to have a good quarterly. That's another thing I wanted to talk about was quarterlies. But so I'm pretty bullish on this at the moment. I've had bought some at the last quarterly, which is in I think the announcement was back here somewhere. So end of April, I bought in at 39.5, and added on the when gold broke out, I added at 51 or 50, I think, on that Thursday there. And I think it's, this is a really lovely volume trend here. Very unloved stock, massive basing pattern, fundamentals probably the best they have been for a while. This stock they haven't had to raise capital for years. It's only got 200 million shares on issue. The market cap's only 120 million Australian dollars for about 120,000 ounces. Probably 110 to 120,000 ounces, and they're making very good margins. They're a high cost producer, and they're in the Philippines, but they haven't been sort of under the ire of the government as some companies have been there, such as Oceana. But this is a really perfect looking chart. It's broken out, and it's sort of sitting at that resistance level there at 60, where it got also in mid last year. But I think if it goes above this 60, you could easily see that next target in that 80 to 90 cent range and beyond. I mean, this reminds me very strongly of Resolute Gold. And if anyone was following the channel in 2009 and 2016, I called this Resolute Gold move I've still got the lines on the chart here. I called this move on, bought the stock at sort of low 30s and added up to 50, and then held most of that, gradually offloading them all the way up, and then sold around here sort of thing in this high ones. Sold the last of my position, and that was probably the best gold stock trade of 2016. And I can see some similarities. Medusa doesn't quite have the production level that leverage from huge production that Resolute had at the time, but they do have a similar cost profile and benefit tremendously from a rising gold price. So that's, Medusa's one of I've added that into my portfolio recently after owning it multiple times in the last 5 years on production results, and I have talked about it in a few videos. But so Resolute Gold itself, I'm not an owner of, and I don't. I'm sort of just always a bit anxious about this stock. There's something that just is off-putting about the production profile at the moment. That it should be all coming up roses, but the way the trading of the stock is not conducive to sort of it shouldn't be trading in the way it is given the gold price, and that's down to market skepticism about their cash burn, I think, and their ability to hit targets has kind of come into question. They've got a Syama operation I've got the announcement from the other day here, just is ramping up their underground production. I pointed this out on Hot Copper the other day. This announcement reads quite well when you start off, and they use this. They talked about how they had 600,000 tons, and 600,000 tons is their target level from their underground production. And when you read this, you think, oh, they've hit 600,000 tons. But when you read it a bit more closely, it said they've blasted the total blasted ore tonnage mined. Now, in my mind, mined means not just blasted; it means trucked to the surface, ready for processing. And in this case, they haven't mined that ore; they have blasted it, and it's still underground. They've actually only hauled 320,000 tons. Now, there's a technical reasons for this that I'm not fully across, and they're probably completely correct, but it's just a little bit disingenuous. And this sort of stuff has been in Resolute. When you follow companies for years, you get this ability, and particularly if you follow good stocks and you see stuff like this, you get the ability to sort of question whether that's a good way of presenting it, and what else they're hiding. I think they should be in a good position, but this, they burned a lot of cash, and the mine's doing well, but the market is kind of just not that interested. So it's something I want to. When the gold price is doing well, I don't want to be hit by production risk and risk of sort of management that I'm a little bit doubtful on. The CEO buys a lot of stock, for example, but that to me is kind of a red flag sometimes when it's almost too much. It's almost trying to convince me that everything's okay, and that's sort of been the case for the last couple of years in Resolute. Everything hasn't been okay, and everything's been spun very positively, but I'm a little bit skeptical still. So I don't want to own that at the current price, and I want that technical risk to be completely removed before I own the stock. And in the meantime, instead of owning Resolute, I've owned Perseus, bought back into that sort of in the mid 40s when I thought the gold price was kind of looking pretty positive, and you want that exposure to US dollar gold producers. And that's been doing really well the last couple of weeks on that surge. I think it was probably on the US dollar gold move, breakout above sort of 1350. Perseus, I think, was the strongest stock that day of the sort of small mid cap producers. Had a 20% move, and now sitting at this. So it's kind of got two resistance levels here. One's been this sort of 45 to 50 zone, and then the other's been up at this sort of triple top, I guess, at the high 60s there. So it could. I'd like to see it get above that, and I think if it can get above that sort of 65 to 70 zone, then you could see 80 plus, and it should do very well in this environment. And I like that their production levels are a bit more consistent than they have been in the past. I think they're probably going to have pretty low costs, and they should be a lot of those dropping costs and the rising gold price should go to their bottom line and their cash balance. So that's really positive, and I like Perseus at the moment. Silver Lake is an interesting one. I've followed the stock for a long time. Don't own it at the moment. Been the best performer in the last couple of weeks. It's surged up from sort of 50% almost in the last 2 weeks. This to me is tremendously overvalued and very dangerous to own this ahead of the quarterly that will be coming out in July. I think, so part of this is due to when they bought out Doré Minerals, they added a lot of new stock because they bought Doré with shares. So they issued a lot of new shares, and what that does is it means that the market cap's gone up, and the GDXJ Junior Gold Miner Index has massively reweighted the stock in the index, and meant there was a demand for about 40 million shares, or I think about 30 million, and that was a huge spike a couple of Fridays ago. And I think this has sort of created a trading surge, and people are kind of forgetting the fundamentals. At this point, the stock is valued about 1 billion Australian dollars. Does have 100 million in the bank or a bit more, but on a production level of I think about 250,000 ounces, this is tremendously overvalued. It's a high cost producer still. Silver Lake's mine at Mount Mungo was, I think, producing at about 1,350 Australian dollars last quarter. Deflectors is a lower cost operation, but I think the group production might be 1,250 to 1,300, and this doesn't add up to me. And I think this is completely sort of trading induced, and coupled with some good drill results and a lot of speculative interest, this has got like a real sell flag on no, red flag on it to me that you don't want to own the stock at the current price. That's my opinion, obviously, and I've seen this sort of thing in before. We've seen Ramelius had something similar a couple of months ago. Had this surge. I happened to own this at the time, so I was quite happy with it. But above 80 cents, I said it was a sell, and I sold all my stock. And this, then they've had they've probably been one of the worst performers in the last couple of weeks, to be honest. After when the gold price is surging, they've fallen more than any other stock in that sort of sector, I guess. So that's in that mid cap range, sort of 500 million market cap ish. They've been one of the worst performers. So that sort of explains. I think I had their latest presentation here, and one thing I think Silver Lake and Ramelius both have in common. You can see there it's it's about a $500 million market cap at these prices. They're reasonably good. So it's similar production costs to Silver Lake, and that probably tells you that Silver Lake is tremendously overvalued. They're probably in the same range of production. Maybe Silver Lake's a little bit higher. Silver Lake's double the value of Ramelius at the current price. Ramelius, I think, they tend to understate their targets. The problem with both Silver Lake and Ramelius is they don't have that. They have to spend a lot of money on exploration and development to keep their production levels up. These are short mine lives. They're adding bits and pieces. You can see Ramelius has got to add all these bits and pieces in here, and that'll cost money to develop each of these, to do the pre-stripping, develop the infrastructure. So once they've done that, they produce at reasonable levels, and they've done reasonably well with mine life extensions. But it's hard to make money doing that, and there's a lot of costs that probably aren't shown in the all-in sustaining costs. And I think that's what dawned on the market when they announced this change in this new mining strategy, which is incorporating the Tampere project that they bought off Explorum 6 months ago. So the market's actually looked at their full production guidance and said, oh, it's actually not that great. I don't think Silver Lake has given guidance out to that level, but if they did, maybe there might be a bit more. That's another potential trigger for the Silver Lake share price. But so Ramelius and Silver Lake, Ramelius at these levels is getting good value with the gold price where it is. So I'd be much more inclined to own that than Silver Lake at the moment. Other stocks that are moving, I'm not going to talk about everything here just because you run out of time, and it's unless there's actually sort of company specific news, it's probably not worth it. Dacian Gold's obviously been struggling as well after the sell-off, which I talked about in the last video. Been under pressure. This is really, I think, institutional holders still exiting the stock. Probably something to do with tax loss selling last week. It's had a pretty bearish there. Anytime it tried to sort of peak above that sort of 60 level, it's been knocked back down. If you break this down to a sort of a half-hourly chart, for example, you can see that was actually the volume really picked up. The selling volume really picked up in that 65 range, and that means that I think there's probably still some overhang there of holders who were trapped and couldn't sell at that 65 level and have been willing to drip feed them back in when it's come back up. So that's explaining this. How long that can go, who knows? But the stock's had a lot of turnover in the last 4 or 5 weeks. But I think we're probably waiting for that new mine plan update, which should be in the next week or two, and their quarterly production results. So there's a few triggers in the market. I tend to think there were probably a lot of bad news priced in here. So I think the company's gone from over-promising to now potentially under-promising. They don't want to get the ire of regulators and stuff for that. There's might potentially legal action here and this sort of stuff. So they want to be ultra conservative and not overpromise anything. So I think there's a lot of bad news in here, and it might not take much for the stock to move, except for that overhang there. If they can, so there might be sort of competing factors and potentially a buying opportunity. I haven't bought back into this or bought more stock because I'm just I'm waiting for the uncertainty to be removed, and then I think potentially it could break higher, but it's going to be a grind here for a little while yet. Northern Stars, I'll talk about that briefly just because there was a couple of news articles I read last week saying that they're interested in buying the super pit from Barrick and Newmont. I think Northern Star stock's very overvalued here. Another one, you've got to be aware of these quarterlies. A lot of people jump into gold stocks and then forget about the quarterly reports. And we're in July. Come Monday, it's July, and then in the next 3 weeks, you'll get the Northern Star report. Pogo has been a drag, and these are risk events that if you're trading these stocks, you've got to be aware of, because they will gap down, 7 to 10% frequently, and you can get trapped there if you're not paying close attention. So I don't like to hold stocks where I think the quarterly is likely to be poor, and I think Pogo, they're going to struggle to turn that around again, and that might eventually, the market's not going to like that, and I think maybe this is the month where that hurts the share price. So I think you've got to be aware of that. That super pit thing, I don't know how much of that is true. They've been talking about that for a while. It's been on the market. Barrick have wanted to sell their share for a long time. That's another potential. Northern Star, if they have to issue shares, they don't have enough cash to buy it. If they had to buy it both, I think you're sort of talking a potential acquisition there of 500 million Australian dollars or more if they wanted to buy the whole thing. Up to $1 billion potentially. So they're going to have to issue shares for that. So, it's a good time to issue shares, but it's still going to be they're going to have to issue them at prices a lot lower. I don't know how imminent that thing is. That is imminent that buyout is, if it's actually going to happen. But something to be aware of anyway. Gold Road is a stock that I forgot about in the last video. A few people asked me about it. If I can find it here. It's something I talked about a few times. I did own it. I was acquiring in this sort of 65 range, and then I've been selling above $1 and sold out completely at about $1.10, $1.12, I think. Not that many, not as many as I would have liked, but I sold the remainder of my shares there. Came out with I talked about this a few times, that they were overvalued for where they were. There's still risk here, production updates. They came out with a delay to production, and that was this announcement here. Happened to be when just when the gold price was surging, which helped them a little bit, I guess. But again, it's underperforming. If you've bought it recently, it's underperforming the rest of the sector. So just another example of being aware of the fundamentals helps a lot, and not just trying to get caught up in the trading action. This has been a really good trade, and a lot of people have jumped on probably at 90 cents plus. But I think the stock, for the production levels they're talking about, and their exploration assets, people seem to talk about them, but it's really all about potential with Gold Road. Their other exploration assets aren't actually looking that great to me. But they grew shares. I think that will be a good mine, but it's all in the share price from where I can see. And when something's all in the share price and they haven't even been producing, to me, it's not worth owning it until that risk is removed, and then it can start trading with the gold price a bit. So I don't own it anymore, and I probably won't be thinking about it at these prices until there's, unless there's a massive exploration find. West African Resources, probably, starting to perform pretty well here. Had a nice couple of days with the gold price moving, been holding that level above 32, sort of poised about 33, 34 here. If it can break out above there, I reckon you can see a nice move up toward 40. But it's struggling here, probably overhang from that massive share issue they did in December. Probably some of those people wanting to get out of the stock, and that's holding it back a little. But I like the way their project's progressing. They had their a little construction update the other day. Wasn't heaps in there that we didn't know. 45% project complete. Looks like everything's moving ahead. It's the people on board doing the project look very strong. So nothing's really, it all looks very positive. It's 300,000 ounces in the first year, all positive. Burkina Faso, obviously, there's been security issues, which I've talked about before in these videos. Market cap for West African is fairly high, close to 300 million Australian dollars. But for the quality of the project here, like less than $600 cost in the first year, well, the first couple of years, I think it is. That's extremely good. And they do seem sort of a pretty well run operation or run company. So I'm hoping that the market sort of catches on to that, and they sort of get viewed as the best developer stock to be in. So I think charting looks okay. It's not particularly strong here. but the price action's been pretty decent the last week. Doesn't look like maybe some of that overhang's disappearing. The other one, CDV, been bullish on the stock for a long time, still underperforming the sector. Who knows why? Had that big sell down, which I talked about in the last video. It might get a run here if someone can, it gets a little bit of promotion. It's very illiquid, which is probably part of the reason why it gets sold down, because no big institutions want to accumulate the stock, because without pushing the share price, doubling the share price if they wanted to buy anything significant. So it sort of treads water here. There's people sort of just gradually getting disinterested and selling out, I think. Probably some stale holders in the large holders as well, like this one here, exiting, and that overhang just gradually getting out and no new buyers. But I expect that these are the sort of stocks. This is the sort of stock that will get interest as the gold price moves up. But it's going to take a little bit of time for that. It takes time for that the information to filter down through the quality stocks. From the producers to the junior producers to the developers, and CDV's, I think, one of the best development projects around, particularly with the scale of production. 5 million ounces in the ground is unheard of almost at the moment. So, I really like the stock and continue to own it here, and I gradually accumulate every time it drops back down. And I think at some point it's going to move. It's a really hard stock to own, but at some point it'll move, and it'll probably move quickly because it's just so illiquid. So that's pretty much all the stocks. I'll talk about the one thing. I mean, if you're not interested in the gold stocks specifically and probably want to iron out some risk, like I've talked about the GDX before. I used to chart them, but they were just they didn't do a lot for the last year or two, so I sort of stopped charting them. The GDX and GDXJ. GDX Junior is the gold miners index, the mid-cap gold miners, mid to large cap, I guess. That's looked pretty strong the last week or two, and this is where you'd expect the money to go first. And that's kind of what's happening. It's at the same level as that kind of Trump breakdown level in 2016, and looks strong there. If it can, it's starting to follow the gold price. So that's where you're likely to see the bigger money, institutional money, sort of go to the gold. If they want to go buy gold stocks, they're kind of going to buy the GDX. ETFs are a huge factor in the market. Like I talked about, the GDXJ owns sort of, I think 7% of all of the sort of gold miners in the world. All the gold miners above a certain level, they own about 7% of that. So that's a huge, and I guess that's often they're the marginal traders in those stocks. So very important. And GDXJ is kind of outperforming. It's probably performing about the GDX. It's underperforming. Sorry, it's about the same performance as the GDX, but it's not reaching those highs that it had at the same level in, say, 2016. So it really shows the juniors are struggling to attract any interest. But I expect that would be where the money would go. I think if you looked at that performance in 2016, the GDXJ probably lagged the GDX initially, or sort of matched it, but then had that surge above, a surge higher that probably wasn't matched by the GDX. And I'd expect to see the same thing again. GDX started well here in 2016, and then maybe moved. It probably had an 150% move from there, from that sort of initial trading range at 20, went up to 32-ish. But the juniors started off at 30, and then it went up all the way to 50. So it had like a bigger move from that initial consolidation. So I think that's where you're going to see those juniors move later, and then it filters down to the categories below the juniors, below the gold producing juniors. It filters down to the developers and the explorers, and that's you sort of got to be waiting for that move as the interest starts to filter down, and be in the right stocks a little bit beforehand, and then you can really catch some good moves. So that's what I've been trying to do, and I look at the ETFs mainly to gauge sort of, I guess, general investor interest in the gold space, because ETFs are very important, and money flows into these things now, and they're probably a much more important factor in the market than they were, say, in 2011, 12. So that's all the gold stocks I've been following at the moment. I do follow some others, but it's not enough time to talk about them all. but that's kind of what I'm interested in at the moment, and I'll do another video as the depending on what the performance of the gold price is, and what announcements are made in the gold space in the next few weeks. Thanks.